The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days at 11 o'clock till noon. And as you heard, Tiger Technicians Hour, I love to take your calls at 877-927-6648. I've been thinking that this is going to be one of the most important weeks we've seen in a very long time, and March could possibly be one of the most important months for information. Not necessarily where it goes intra-month, it's where it closes and how it closes. It's also a period where we've seen tremendous declines in crude oil and many of the commodities. Bonds have held very well. The dollar screamed to the upside, and it's just about, it's within a point or two of major left side cup formation resistance. And there's a lot going on here that says, for those of you who have been in the market for a very long time, you might have recognized it yesterday, especially if you listen to some of, I didn't listen to much, but I listened to enough on CNBC. And I've also read, I got sent enough articles over the last couple of days telling me that the period of March into April up until tax day, April the 15th, is usually the very best, 100% up in the last many years. You know what? Statistics are there, and they're only statistics because on the other side of it is a number. So if it's 1 in 3 or 1 in 10 or 1 in 20, if you're in the 1 category, you're right 100% of the time. If you're in the 20 category, you're right for 100% of the time. But if you choose the wrong time to be in the wrong position, it could be a mistake that has unforeseen. So let's put it this way. It could be a mistake that is costly. So I don't believe in statistics as anything other than, just like I look at chart formations, they repeat very often over time. They are fractals. And that's what I like to look at. Statistics are the result of those particular fractals and the conclusion, the culmination of the entire pattern. When I look at the market right now, let me just run, I think it's important to run the numbers right now. I'll run it, there we go. Oops, I hit the wrong button there. Am I going to find it? Yeah, I'll move this one away. There we go. All right, so we've got the Dow down 160. Let me do this right here. This is the E-mini. This is the wrong, this is the dollar contract. I didn't mean to do that. Let me just run this, and I'll do it with the charts at the same time. Look, there was a pattern on the way down. Green, red, green, red, green, red. And occasionally there'd be just 2 little bars that in the same direction, but basically were alternating to lower lows and lower highs. And when I said to subscribers to my opening call this morning, oh, I can't believe it. I almost did it again. It's unbelievable how this mind just keeps moving on. Never looks back. This morning in my opening call, my Trader's Corner, that's where we put all the positions and what we're looking at and why we're looking at, what we want to get in, etc. And then the first paragraph is usually a summation of everything. If you don't have time to look at the umpteen charts that I send out every day, that just sums it up if you don't have time, and it gives you the trades. I had well wishes to our Irish friends for a happy St. Patrick's, and then I took it out because I wanted to put something else as a top, as a heading, to discuss the paper that I'm hopefully completing in the next few hours to send out to subscribers. It's 16, 17 pages, actually. It's more than a paper. It's a little booklet But it's really giving the parameters and all the different important indexes, the socioeconomic, the whole bunch. And then I forgot to put back happy St. Patty's. So have a wonderful day to all of you celebrating. And these are very important days for all of us in our different religions and beliefs. It's part of what makes the character of this country, why this country is so great. So most importantly, we've got the Dow with the potential here of that falling axe formation. It actually took it out yesterday, but I actually like to always raise it to the point where it's more important. I go to yesterday's high, which says that a move this week after the Fed announcement, I'm going to talk about that in a moment when we get to the bonds, pushing into the 18,020s would actually start leg B up in the Dow, and it'll actually be on a short-term basis. It'll be quite a positive because it's going to help the weekly chart. Right at this exact moment, the Dow down 167 at 17,810. The weekly chart looks like it wants to fail at a peak D, but it's one of the only ones at a peak D. Now, most importantly, let's go to the S&P, SPX.X. The S&P, right, correct, says SPX.X. The S&P has already made a B, and it's going to be a peak B if there's no new recovery high today above yesterday's 2,081.41 high. That move was just a little higher than I expected. I expected the 9-period exponential moving average to give a lot of resistance, but instead what happened was, and this is going to be very interesting, instead what happened was we essentially got the potential for a single leg A up that might fail. So I'm looking at this askance and I'm saying, okay, show me what you got by the end of the day and show me what you got at 4 o'clock on Wednesday after the Fed announcement. That's interesting. Yep, there it is. So the S&P is down 12 at 2,068. It's underneath the 9-period moving average in the daily. Now, the big thing is, will this weekly chart make D now before a sharp sell-off? Very sharp sell-off to test the 2,040, 2,030 area? Or is it going to pull back now? And then later on, and it doesn't pull back to the lows of October, instead it pulls back somewhere to about deep enough to really have a scary move of 8% to 10 or 12%. So it could take it down to maybe the 1970, 1950 area. And then it moves higher. And if it moves higher at that point and goes to leg D, that is very bullish because after consolidation that concluded C, to go to a D says you're invariably going to go to an E, or you could even recycle, and that'll fit exactly with the scenarios that I'm looking at. So S&P, upside, a break above, a close above 2081.41. No, a close above 2085 by Friday would be very positive and say, no, Mr. Chapman, we are going to go to D right now. We're not waiting. Okay, so let's go to the QQQ series. Let me get this out the way because there's a lot to discuss. I said yesterday that I thought the Qs were very weak. I still think they're very weak. They haven't even gotten to the downtrend line at 107.10, let's say. It's at 106.35, down 35 cents. My thinking here is that the Qs, also using Apple as a nice indicator, is showing that there is some strength, but not enough strength to take it up to above the 130 area, which would say you break above 130 and you cannot rule out a test of the 133s. There was a 133 round number high the day before, the 133.60 all-time high. So I'm watching Apple closely. Now let's go to, we'll do the others real quickly. NYA.X, just let me get these done. See that, keep hitting the wrong one. I've moved my chair. Yeah, NYA just doesn't look like it's got. Made a doji high at 11,142 on the 25th of Feb. And that doji peak E has been given a substantial pullback. I think that is stalling. I think it has to wait. So the New York Stock Exchange is just stuck. And then I want you to go to, what am I going to go to? Oh, IWM. Now, I'd say that my suspicion was that the IWM would, if it does, is going toward exactly to 123.78 or slightly within a point above it, and then it's going to pull back sharply. I still feel that way. That's the Russell 2000. Very nice move, kind of led the way. Now it's stalling. Let's go quickly now. I want to go. GC, this is gold, down to it, 1151. Went to a lower low today in leg E. Broke the support. It's broken the support of the weekly chart. I can now take that. That's the Chapman wave falling axe, inverted falling axe. So you got to be careful that there isn't a retest of the most important low. It's taken out the low of the 5th of December at 1142.90. Today's low is 1141.60. Hasn't closed there, but it's gone below that left side low. And that says between that low and 1132.30, the low of the 7th of November, it better hold, because if it takes that out, it's going to go under, and then it's going to try to go above, and that's going to be very important for gold. And if we put crude oil at the same time together, crude oil is showing no strength at all in the weekly chart. In the monthly chart, that's what I meant to say. Monthly chart, the stochastic's trying to flatten out at 5%, but it's gone under that important bar that held support at 44.26 in the continuous contract. It's going to be really important with the stochastic at 5%. How does it get to 25 to 30% over the next week and a half or two? Because that's what it's going to take to make a V-shaped turnaround. Aha! But it could do it if two things happen. One is the dollar, because of what the Fed says yesterday. The dollar's in a peak F/B. The MACD is still very strong. The stochastic's still at 92%. I don't have a signal yet to say that it is a peak F top. I have more of a signal saying consolidation after a fantastic move. How at 99.45 on the index, down 15 cents, how the dollar handles the 98.71 to 97.95, maybe even the 97.15 moving averages support levels is going to determine whether we get the Eiffel Tower straight up, straight down, uppercase A type pattern, failure pattern, or whether it goes into a rectangle sideways move and it just digests the gains before stabbing into the left side high that goes all the way back to I think it was 2003. Yep, 2003 at oops, no. It was this one right here at 102.15 back in March of 2003. Let me say that again. 2003. Remember all that time that Paulson was saying. Well, I think it was Paulson saying, we love a strong dollar. We want a strong dollar. As the dollar was just tanking. I mean, I don't know how. As a politician, that was the most unbelievable thing. That was perfect. I mean, I could mention names of politicians, but I don't have to because that was just absolute. He would stand in the camera and you see the dollar, whoosh, the parachute down, and what would happen is he would say, "Oh yeah. We're in favor of a strong dollar." That was beautiful. There's the IWM question about it. I'll give you the 120-minute chart right here. All right, folks, we'll be right back. Basil Chapman, Dow's down 186, S&P's down 50. We'll be right back. I'll talk about the VIX as well. Get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And I had a question in the Den. The Den, of course, is that wonderful medium that we have here at TFNN where folks can see the charts right through the day, everything that we're doing. And they are also there to ask questions which get answered sometimes during the commercial breaks. And I often do a lot of charts during the commercial breaks. This particular time, I was reading... I want to review my updated to my webinar that I gave a month ago on the similarities between late 1920s and now. And this particular chapter right here, well, let me put it this way. It's an article that I thought would just be kind of updating everything, but it's so intriguing. It's such a fascinating thing, trying to find a formula in which to be able to pick out icons, certain things that would suggest that we have now reached that particular point of excessivity that matches the 1920s or any other major period, or 1999 to 2000 in the NASDAQ. I don't think we're there. So there's a heading of a particular section that says refurbishing, renovating, doubling in size, going vertical. Let me show you something. Well, I wonder if I can do it. I'm going to try to do it now. As I say, this should go out to subscribers. I'm hoping that it goes out today. They are. Now, let's see if I can find this. Would you believe, there it is, that every one of these buildings represents a top in the market, but not just a top, but a major, major, major top. Look at this, 1931 Empire State Building. Don't have to go into that in great detail. What the heck is that? Oh, Hong Kong. So this is really the one I want to look at. This is the Shanghai. So this is Shanghai World. Can't read it from your Finance Center, 2007. Wow, 2007. Let me think here. I'll get back to the IWM. FXI, right? Let's use the FXI. When was the high in the FXI? That is the iShares China Large Cap ETF. And I had someone from China correct me when it was called something different. It was called the Xinjiao, I think, Xinjiao Index. Gee, isn't that a coincidence? Look at 72.26. Peak F in the Shanghai. This is the iShares China Large Cap ETF. Peak F, October of 2007. And it plunged. I would say it plunged down to 19.35. October 2008 took just 1 year, and it's never gotten even close to a 50% retracement. Isn't that interesting? You can go through them all like that. Look at this. Of course, I'm not going to find it now. Will I find it? Uh-oh, trouble. Yes, there it is. Look at this. You've got the World Trade Center. Well, there were two trade centers. You remember the World Trade Center matching buildings finished in 1972. Well, let's just have a look at this. Let me go back. I don't know if I can go back this far on this particular chart. Let's just see SPX.X. Whoa, look at that. 1990. Oh, let's hope it, yeah, it does. It goes all the way back. So look at this. There was a 51, I think it was, percent decline. There we go. Keep going, keep going, keep going, keep going, keep going. I don't have it. I could put it on here. So I think we must see it because 40 years, let's go 50 years. Format, 50 years. 50. Thank you. Thank you. And there it is. Look at that, 19. So I've got them all notated on this particular chart. Unfortunately, it's A, B, C, D. It's either D or E right there. 1972. No, it was January of 73 as the buildings were completed. But it already had a number of issues. Look, there were very sharp declines. It was a very choppy period. Then right there, 1973, 50, what is it? It goes from how quaint, 121.74 to 60.96. I would say it's a 50% decline. Okay? And it just goes on. It's an amazing thing. I call it man's time freeze with an icon to his ego. And it's always a man that has done that, so I say to his ego. Isn't that incredible? Look, that's Shanghai. This is Taipei. Same thing in Taiwan. A major top back in 2004. Wait a minute. This is the other build. Oh, this is the new towers, the Twin Towers. So we can exclude that. Is that right? The Freedom Tower. All right, that's the Freedom Tower. But look what this is. This is the Burj Dubai. It was still called Burj Dubai. It isn't called that. They had to change the name and close the market for a week when this was about to open and change the name because of the crash in Dubai. I'll be right back. Basil Chapman, Tiger Conditions Hour. We'll look at the IWM.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Let me just do this because I'm bound to forget. I had a real quick email from a caller who called the other day, and I said, please call me by about Tuesday or Wednesday about INFN, which is Infinera Core, and it was in leg C in the monthly. It's in the 120-minute chart is an F/B. The reason why I have F/B is because it's screened up to in the stochastic straight up, and then it came down quite sharply, but still at 90%. So I want to give it the benefit of the doubt. Nothing to do, just to be aware that it could be an F, but my bias right now is to say, just think of it as holding the 9-period moving average of 18.83, and that says you've got a moment longer before you have to make a decision about what the lettering is. And the weekly chart is in leg E, very strong MACD, strong stochastic, and the daily recycled, I've got this here again as an F/B, only because that was that was like an H pattern, the lowercase h pattern, but it also formed a kind of a weird, it took a little long, in fact, that's what it was to break out. Breaking out, I've got it in probably leg C. I like it, I think it's great, and my current position as a buy of 13.37, and you're up beautifully in this particular position, way of about 40%. I'm going to suggest your core position, don't even think about doing anything. Give it another day or two and use 18. It's at 1904. Use 1837 to 1810 as where you can think about taking something off, still keeping the core position. But if there is a close under 17.70, I'd actually start lightening up. That's number one, because the weekly and the daily are saying beautiful action. It could go on higher, but it might be market vulnerable if it suddenly takes out the 18 support and it's at 1906 right now. That's number one. I would keep the core. I think you've got a beautiful position. At least for now, I'd be thinking along those lines. I'd try not to be flustered out of the trade. Now, here's the other thing. If this thing takes out today's high, INFN, trading in 1906 up 9 cents. And the market is down 168 in the Dow, 13 in the S&P, this is great action. If it's able to break above 1919, preferably if it can go to 1927 to 1932, kind of get away from this 19 area and push away, I would then raise my stop on my small position on the trading part that I'm talking about that you would take off. If you haven't taken it off by then, if it's rallying, I would just merely put a trading stop. 1906, it goes to 27, so that's 25-ish cents. I'd have a 25 to 30 cent trading stop. You will get taken out, but you might get taken out quite a bit higher. It's acting very well, and even the 120-minute chart is saying, you know what? I've got a lot of support at the breakout level of 1875. If I can just hold steady on any little bit of a breather, there's a chance that on any market strength, I might take that opportunity to push into the mid-19s, and that'll be very good. Where would my target be on this particular stock? I'd have to say that looking at it, let me just check the time. Looking at it, there isn't any left side resistance until it gets to between 22.49 and 22.68. It really is looking good, and the monthly chart is, it's developing a kind of a thrust to the upside that says it might be a culminating move, and then like it went to peak D and took a long time, about 2 years in fact, to digest. It might be a culminating in a move on the upside, but not until D, I think, is made. I don't think it's going to be C. C will see a pullback, but I think it'll be D that is the one that you have to be really careful of. So I hope that helps you. And two other things that I wanted to talk about in the stock was, leg. I've got it as leg B. You could call it alternate count. No, I just call it leg E for now. I don't have any problem. I did this quite carefully the other day. Leg E in the weekly. Leg C in the monthly. And new leg F/C in the daily. Let me see what you get. Not quite sure the way you can. Well, that's what I've got. Actually, everything about it says that I shouldn't be wishy-washy. I should call it leg C, and I'm going to call it leg C. If it fails, then it's going to be an F. But there's no reason why it shouldn't go to a D by the end of the week, or maybe Monday or so. Hope that helps you. Okay, so now we're going to go to IWM. IWM, back again. The question was, hey, mister, how come you're thinking that it's not going to go for higher than 123s? I didn't say that. I said, I think that 123 to 124.30, that's what I said yesterday, I think area could be very strong resistance. This is my thinking. Now I can tell you what my thinking is. My thinking is this candle from peak D with one bar down to leg D, one bar down, slightly lower to peak D, means that this is very much, if you know my CD introducing the Chapman methodology, I talk about the smooth peak G. And what the smooth peak G is, it goes to an F and then barely pulls back. An F should be a very sharp decline, and then it just squeaks to a G. And if you look at it, at first you don't even notice that there's a trough to make a D and an F and a G. But if you look at it, it has to be within 3 bars. And when it does, it says two things. It says that the down move could be sharp, but not as sharp as if it was a peak F, because you usurp some of the energy as well as some of the negativity by going to that extra step within 3 bars to a higher high. That's number one. This is the same thing that I'm looking at here at peak D in the IWM. Let me show you a long-term weekly chart of this. You see that pattern that says there's a left side cup. I'd spoken about this. I'd spoken about it over there. So that was like last year in July, August. I said, I think what might, and then I got it confirmed when we came back up again in October. And I said, the IWM is making a pattern that is one of the chart formations that I never see spoken about or written about And it's something that I've been looking at for years and said there has to be something about it. And that is the inverted cup and handle. Look, there's the handle, there's the cup. It should be cup and little handle. That's a cup and handle on the right. And what I said is this pattern I've seen so often now that I'm starting to give it a kind of a title. And it's like an inverted head and shoulders, upside down. There's the shoulder, there's the head. And then it makes the right shoulder. But the difference is that this pattern doesn't break to the upside. It doesn't break down like a head and shoulders does. In other words, break up. In fact, what it does, it stalls just above it. So that's my thinking, number one. And number two is, I'm going to open this up so you can see something else. You see this chart that says that that leg D had a stochastic that was quite strong. I was anticipating that if there was a rally to a new all-time high in the IWM, there hasn't yet been, what will happen is it'll go if it goes there, it's going to go slightly above, and then the stochastic is going to fail, and the MACD will finally start turning down. Wrong. The MACD is holding really well. So I could be wrong about this, and it could not only break 124, 20s, it could actually spiral to the 125, but not if the stochastic continues going down. It'll drag that fast-moving average, the 9-period differential in the monthly chart of the IWM, lower. And that's the way I'm looking at it right now. And then what happens in this particular pattern is that that becomes like a little mini cup right there, and you go from the left side lip to the right side slightly higher lip, or test the exact level. You see some weakness in a time frame earlier, that's the daily, and you see weakness a week later or a bar later in the price point that you're looking at, in this case the weekly, and that starts to fail, and the next thing you know is that that bar is starting to test key support. In this case, 121.11 is the 9-period moving average. That's my thinking, and I hope it kind of helps you. Just I also wanted to just give you the modus operandi that I'm looking at right here. So I said that was the one thing I was going to do. No, the other thing is this. I wanted to check on the housing, because the housing is where did it go? Oh, typed it onto the chart. No. I have to thank TradeStation. They did a fabulous job so far. It really is, of my typing on the charts, even if I'm missing it. Why is it so far away? Space to the right. Oh, 6. There we go. Look at this. Home builders. There's a little pattern that we always look at. The lowercase h. Is it going to work here, that it retests the low that was made a few days ago? It's trading right now 227.55, down 89 in the Philadelphia Housing Sector Index. Dollar HGX, that's how I get it, made a high of 234.20. Why didn't I type that in? 234.20, 234.20, and of course I forgot what day it was. I think it was February the 24th. Yep, February the 25th. Let me type that in as well. Okay, and 224.15, and then it comes down to the 224s, and then it bounces to about 230, and now it's struggling. And there was a report that said housing was down. Well, of course, with the weather. Now, I can understand in the Philadelphia housing sector, when Toll Brothers or Lennar, any of those companies come out and say, we were weather impacted. I can understand that. I was weather impacted. It was a horrible winter in terms of getting around and all that. I happen to enjoy the fluffy snow instead of that wet stuff, but that's beside the point. The roads were just impassable in many places. So I can understand that. And then you say, hey, that means that the weekly chart is holding up pretty well right now. It's only down 0.98. It should have been down about 1.30. But I'm watching this, and I've got leg C in the monthly. It could be an alternate count, but I'm giving it a C for now and see why I should give it anything else. And most importantly about this is that within the context of the lower interest rates, and I don't think that the Fed is going to be able to do all that much about interest rates. I believe that they are now trapped between a rock and a hard place. We used to joke because it used to be Iraq and a hard place, but now, of course, it's a rock. Different context. And what's the story? The story is this. We might be talking about the TLT, but look where it is. It's in leg B with an inverted, look at that, with an inverted island reversal. Island reversal. What is an island reversal? It's exactly that. Here's the mainland. There's a little island off it. And what does it mean? There's a lot of water in between. In this case, it's air. On one day, you're trading at 125.90 as the low. The next day, the high is 124.83. Okay, drops a point and boom, goes down. Hits a low of 122.97. And that 122.97 has another bar, a little doji candle the next day, and then boop, it spikes higher. And it turns out that that little yellow thing that I circled is exactly the mirror image of the what? The TBT. Of course, if you type TBT, you'll get TBT. Look at that. So 47.54, I have to put it down, arrow, because all the technicals are negative. It's under the 9-period moving average for a number of days. And that's saying, yes, you could get a bounce from here. The very strong resistance in the TBT, which is the ultra-short Lehman 20-year T-bond fund, is round about 45.22. I'm going to make it at 45.40, 45. A break above 45.45 says, aha, now you can try to fill the gap, because the low of the gap is at 46.70 on the 9th of March. So I don't know. What can the Fed do? Look, there's a competition for lower interest rates around the world. You can't fight that. That's governments pushing rates down, right? Japan has said that if we want to buy whatever we can, anything that moves, we're going to buy. Aren't they going to be buying the U.S., the safest country, so-called safest country in the world? It really is. You want their bonds, right? So they're going to buy our bonds. Who's going to be selling? China at this particular point, I don't think they're going to be selling our bonds right at this moment. I think later on there's going to be a crisis when they need to sell. But I don't think it's right now. So I'm looking at this and I'm saying, if I go to, let me get rid of this particular chart right here, close workspace. If I go to my triple yield chart, long-term charts. Oh, DAX, a question about the DAX. I'll look at the DAX in a moment. Look, it made a peak in the weekly chart, the 30-year, this is the white one, 30-year TYX, 30-year T-bond yield. The 10-year yellow one or gold one is the TNX, it's 10-year T-note yield, peak B, 22.26 was the last low of the 30-year. And even the 5-year, which is in a much narrower trading range and didn't break out, has gone to a peak so far. And look what's happening here. This little cluster formation is going to be very important for us to follow over the coming weeks. I don't know what the Fed can do. I don't think the Fed's going to push rates higher at this particular point. I think we're in a mini recession. I think we're into about the third week out of an 8-week.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Wow, folks, I forgot to even mention it to my subscribers today. That Tiger Dollar bonus is amazing. So please take advantage. Tonight, Tuesday, Wednesday night, Dave White is giving a workshop to subscribers on options. He does options fantastically. So just use those dollars. Go to the front page of TFNN, check it out, and see what you want to use Tiger Dollars for, how you want to build up a kitty. You can say, you know what, I don't know if I want to do anything right now. I'm going to see what I like and who I like and what fits my personality with their personality, their style. Just go there and check it out. But let me also add that I am planning on, as hard as it might be, I'm going to try to get everything out by this afternoon to be sent. That's the paper that I'm updating on the webinar that I did on the parallels between the late 1920s and now. It's going to have charts, comments, articles, quotes, a whole bunch of things, and it's going to go from a Rembrandt to Rembrandt to stockings. There are stockings to Rembrandt. There it is. Now we're looking at the German Dow Jones German stock index. It's a proxy for that, and it's got leg D in the weekly. In the monthly is leg C. And it's going to be really interesting how many C's I've got. The diamonds, I've got the spine, the S&P, only C's. I'm expecting a D. How is it going to unfold? Is it going to unfold now or later? That's the question. But look at this extension in the daily. Leg E, probably peak E. MACD's just turning down, but still very strong. Stochastics 94%, but just turning down. Relative strength is looking great, but just turning down. On balance, volume is flat because it doesn't have volume. So this is going to be so interesting. GB. DOW. This is the same thing. This isn't the index. This is an index of the index. In other words, it's the Dow Jones made it up. It looks really close to the real thing. The prices are different, but the chart patterns are same. Great Britain made a leg B and then a peak B in the weekly. Leg D/B in the, it looks very much like the IWM, doesn't it? In the monthly. And there's a left side, right side price time match that comes in exactly to March, April, probably April. And then you've got a peak E in the daily. It's a V-shaped pattern, but it's having a tough time getting. I would say that at 304, it needs to get to 306.50 to show that it's going to have a chance to get back and start making a leg C in this phase. So, okay, VIX index. That's what I wanted to finish up with before we go. What is today? Options hour. Great show in the options hour. Stay tuned. Thinkorswim and see who's up today. Let me just also put this in. I said VIX index. There we go. VIX index. This is the clue. The VIX is only up 55, up 3.52%. That's okay. It's not great. But it's moving higher off the 9-period moving average, having made a peak D and having, and what I'd said to subscribers is the VIX actually held very nicely. We happen to be long the VIX at this particular point. No big deal because until it really does something by moving into the 17.5, 18.20 area, that's going to make a difference. And then the market will start to go down. If the VIX makes higher highs and higher lows, especially look at this long wick candle. If this on Friday afternoon, if the VIX is above 17 in both the daily and the weekly chart, that's going to suggest that it could be a choppy few weeks coming up. But if, in fact, the VIX pulls back as a 16.17, if it pulls back to under 15.50, especially if it closes under 15 by Friday, it says stand back. We're going to be going higher now and maybe even retest the old highs in the Dow and the S&P in this phase rather than after a more serious correction. Then I'd be real careful. So 1 foot on the brake, 1 foot on the accelerator. It's kind of like our positions, some long, some short. We'll be back tomorrow. I'm not sure if I'll do an interview today, but anyway, I'll be back tomorrow. And thanks, folks, for being here. Have a great day and a happy St. Patty's. And looking forward to speaking to you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.